Hey everybody, Justin Mead here, bringing you your Tuesday tip of the week. This week we're going to talk about what a pre-approval is. So you hear this term a lot, especially from your realtor. When you want to go look at a house, they ask you, hey, have you been pre-approved with a lender yet? If you don't know what that is, obviously you're going to say no, and they're going to say, okay, before you can look at anything, you need to go get pre-approved so that we know that you can afford whatever houses you want to look at. So you come to somebody like me and we sit down and we say, okay, go through a pre-approval. What that means is we're going to look at your financial life and determine how much of a mortgage you'd be eligible to receive, then narrow it down further to see how much of a mortgage you should target based on your personal budget. Okay, so we're looking at things, monthly debt, right? We're looking at your monthly debt to determine how much more debt you can take on in terms of housing debt. We're not looking at things like your grocery bill, your utility bill, your phone bill, stuff like that. So it's important to know going into this how much of a monthly payment you're comfortable with in order to own a home. So when I say we're going to take a look at your financial life, that's where I have you fill out an online application, or we get on a phone and we do it all over the phone. And we get things like your employment history, your residential history. I pull your credit, which is going to tell me your credit score and your current debts, and your past debts. We're going to look at where you have our assets in the bank account or your retirement account or money market accounts. And we're going to have that conversation about, okay, what's your comfortable monthly payment? So when I ask you what's a comfortable monthly payment, maybe think about what you currently pay in rent. Is that too much? Is that too little? And take into consideration that the monthly payment I'm talking about is your mortgage plus your property taxes plus your homeowner's insurance. And if there's any PMI, we take that into account. If you're buying a condo, we're going to take into account the association dues. So that monthly payment really is all encompassing of everything related to the house or condo that you're going to be buying. All right, so in order to look at all this stuff, we need a pretty big list of documents. And for a pre-approval, we don't necessarily need all of them, but once you get into the loan process and really submit an application for a home to purchase, we're going to need all of this stuff. So the main list is your photo ID, 2 most recent W-2s, 2 most recent federal tax returns, including all schedules. So that's important for people who are self-employed. 2 most recent months of bank statements, sometimes 3 months. These days when you're self-employed, we need 3 months worth, and we need it for your business accounts if you have that business. Otherwise, personal bank account works. And most recent 30 days of pay stubs. Now, what I usually tell people is that a pre-approval, if you're hourly or salary paid, and when I say hourly, I mean you get paid an hourly rate and you have guaranteed hours, right? If you're a part-time employee, that's a little trickier. We might need a little more info. But if you work 40 hours a week, no matter what, you're paid hourly, or if you have a guaranteed salary, for that, really, I just need a most recent paycheck as well as a bank statement to show that you got the money you say you have, and I can see right on your paycheck how much you're paid. If you're self-employed or commission paid or you're part-time, that's where we really need to look at the last 2 years history of income, so tax returns, W-2s, 1099s, and year-to-date pay, and mash that all together to come up with an average of your last 2 years of income, because we need at least a 2-year history in that case in order to give you some kind of qualifying income number to use for your pre-approval. Okay, so once we have all these documents, we now have your monthly qualifying income, we have your monthly debt from your credit report, and we're going to come up with a projected monthly housing debt, which is that mortgage, taxes, homeowner's insurance, PMI, and HOA dues if applicable. Okay, so then we use those and we calculate your debt to income ratio. Okay, now take a look at another video. I'll talk about how you calculate debt to income, but every loan product has a certain threshold for how high that debt to income ratio can be for you to still be eligible to receive the loan. And once we know that debt to income ratio, we come up with, okay, what's your maximum purchase price given whatever down payment you're comfortable with. And usually when someone says like, okay, you're pre-approved up to $300,000 purchase price, usually take it with a grain of salt and say it's give or take, because a $300,000 purchase price could mean 2 different things if you find one property that's $300,000 with $5,000 a year in property taxes and another property that's $300,000 with $8,000 a year in property taxes. You may not be eligible for the latter because the property taxes are so high that it moves your monthly debt to income above that threshold. So we're going to come up with that number that you're maxed at, and then we're going to narrow it down like I talked about earlier to see, okay, you should target maybe $250 because you don't want to spend more than X amount a month. And on average, $250 is your range. So once you're pre-approved, I tell people, go start looking online at places, talk to your realtor. If you find one that you like and you want to set up a showing, send it to me first. I'll give you a full breakdown of monthly payment, total cash needed to close, so down payment and closing costs, and what an interest rate today would be. That way you know the numbers behind that house, and if you're still comfortable with that, set up the showing, go look at it, you love the house, you're ready to submit an offer. I send a pre-approval letter over to your realtor, submit the offer, and hope for the best. So in general, that's what a pre-approval is. If you want to get pre-approved or have any questions, feel free to reach out to me, and I hope you learned something from this. If you did and you want to hear more, please hit the subscribe button below.